It's time for your top 5 in tech here at Digits. Good afternoon and welcome. I'm Simon Constable here as always. Scott Austin, technology editor here at the Wall Street Journal. Thanks for being here, sir.
You bet.
And you've gone through gazillions and gazillions of stories. You got it down just to 5.
It was a wild week, but we narrowed it down to 5. Yes.
Okay, let's go for it. Number 5.
Number 5, let's start off with Amazon. Amazon is developing a device to stream video content. This is interesting because Amazon is really trying to build up its streaming video service through its Amazon Prime. And it's going up against Netflix and Hulu and HBO. And it's been
Roku
spending
and Apple TV. And it's getting very crowded.
It's spending a lot of money on the rights to content, and it's developing its own content too. It's spending a ton of money on this. And so it's also dependent on Roku and these other devices to stream its content. So it's possibly working up its own device, just like you're seeing with Apple and Google and all these other companies. What's interesting also is that Amazon came out with its earnings, and its costs are way up, just like it has been over the last several quarters. Its operating margins are razor thin still because it's spending so much money, especially on this side, besides its distribution factories. So I think you're going to continue to see in the next year, possibly 2 years, Amazon really spending a lot of money and its operating margins staying very thin. So that's kind of putting pressure on its stock.
We will stay tuned on that. Number 4.
Zynga, its bleak results continue.
Didn't score big on the earnings, did
They did not score big. Every quarter it seems to get worse for them, and it's almost like they're buying time before they really figure out their business model, which I think eventually will be real money gaming. Right now, of course, they're in the kind of mobile gaming business and very simplistic games, and they are very selective right now. Their users are falling rapidly. The daily average users were down about 21%, daily active users, which is a big, of course, metric for them. Their bookings, which is the kind of in-game virtual goods and ads sold within the games, was down 30%. Even though they somehow came out with a profit, that was a surprise this quarter. Their revenue is down, everything is down, and they're really trying to transform their company. And again, I think it's going to be real money gambling, or gaming, I should say. But that's going to depend on regulation. Is probably years out before they really can, take advantage of it. So
we shall see.
Yeah.
Gaming on Zynga, that'd be interesting.
That's
okay,
right.
Number 3.
How about this story? IBM, its CEO, reprimands its employees. Now, IBM has for years been a very steady performer, always outdoing Wall Street estimates.
They were right up until when they weren't,
exactly.
Which was the last quarter.
And
not very good.
Here we have their last quarter not doing so well, really uneven performance in the last year and a half under the CEO. And she came out with a video message like she always does every quarter, but this time really some salt in there to tell its employees, we really need to borrow their slogan, think faster, move faster.
I think the other expression which you got from our parents sometimes is buck up, kiddo.
Right. But really, they're kind of losing the battle on this kind of technology shift to cloud computing. They really depend a lot on installing software and hardware with their tech clients, and so they're trying to, again, another company that's really trying to transform itself, and we'll see if it can happen.
Good luck to them on that. They've done it before. Number 2.
Number 2, the tweet heard around the stock market here.
This was crazy.
This was really
absolutely crazy.
crazy.
This is when the tweet of the fictional bomb, the explosives and bombing of the White House sends the market down for a few seconds. Everyone thinks, oh my goodness.
Supposedly a hacked account. The Associated Press came out, with this on Tuesday with this tweet that said there are explosions at the White House. It was a fake message, and within seconds the Dow Jones Industrial tumbles 145 points. It quickly recovered, but it really brings up the case on how ridiculous and how vulnerable the market is to just a quick tweet, quick message, because now this is really the state of algorithmic trading, where you're really building these computing systems that can look at news sentiment. Now, of course, Twitter and social media, and trade based on what that sentiment is rapidly, immediately, and that's what happened here. And these computing systems sent out these signals, and it was
wrong.
Yes. So I think we need to kind of it's not really everyone's blaming Twitter at first, but really it's the state of algo trading, not the tweets. So.
Okay, we're at that moment again. It's time for number 1. Drum roll, please.
I have to go with Apple snapping its growth streak, its first profit drop in about a decade.
Ouch.
Now, this was expected. Every analyst did expect the profit to fall, but they were really looking at the demand for the iPhone and the iPad. There's been a lot of signals and signs that the demand may be waning. People moving to the Galaxy S4 by Samsung and other products that are Android-based, the Google operating system. There were kind of signs that the growth is slowing, but there was still great demand, even though they haven't come out with a new iPhone since September. They came out with an iPad mini late last year. But they still sold quite a few, I think 10 million more iPads and iPhones in the quarter. It's almost like we're treating Apple that's about to go bankrupt because the expectations are so high. But while this was sort of a make or break quarter in some ways for Apple, and they kind of proved that they could beat the estimates, Wall Street's estimates.
Well, they are an amazing company.
The issue is going to be later this year, the new products that they come out with, and everybody's going to be looking towards this fall, as they've signaled. This is when the new devices and possibly even a new category. So this will be a big year for Apple.
Well, we will be staying tuned here. Thank you very much, Scott Austin, tech editor here at the Wall Street Journal. I'm Simon Constable, and that was your top 5 in tech.